já tá preparada pra fuder sua safada. Vem sentando na...
Welcome back to the Precision Trader. This is episode 2, and today me and Graf are breaking down something every new trader gets wrong: bias and context. Before you even think about pressing buy or sell, you need to know the narrative you're trading inside of the bias, the direction, context, and the environment. Without them, you're just guessing.
And guessing is why most traders blow accounts. Today we're going to show you how a precision trader actually reads the market. Let's get into it.
So section 1 is going to be what bias actually means. Bias isn't a prediction. It's a working explanation based on what the market already showed you. It's an answer to one question. Am I looking for longs today or am I looking for shorts? Not both, not whatever feels good in the moment, one direction.
And bro, this is where people mess up. They say their bias is bullish, then they take 5 shorts because the candles turn red for 5 seconds.
Exactly. Bias filters out half the bad trades instantly. If you have bias long, I'm not even looking for shorts. I don't care how pretty the candles look. Here's what creates bias: higher time frame trend, liquidity location, premium versus discount zone, what a previous day high, market structure shift. Bias is your entry. Bias is your compass. Context is everything around your setup. Think of context as the story of the market. You're just on that shit, bro.
Bro, it's the same person that calls me every fucking day. Yeah, if bias is the direction, context is the reason you're taking the shot in that direction.
Context includes high time frame structure, liquidity pools, fair value gaps, session timing, and even news. A clean fair value gap doesn't matter if the counter trend. A breaker doesn't matter if the liquidity is untouched. A break of structure doesn't matter if it's in premium. Context tells you if the setup is valid or if you should just sit on your hands. Section 3, how bias plus context works together. This is where the real precision happens. Bias gives direction, context confirms the narrative.
So basically, bias equals where we want to go. Context equals our conditions supporting it.
Exactly. A precision trader never sees a setup alone. You see it inside the whole story. Then you deliver examples. Let's say the daily is bullish, 1 hour is bullish, Asia creates a range with liquidity below, London sweeps it, New York retraces into the fair value gap. Bias would be long. What would my context be? Liquidity grab, structure aligned, and imbalance created. This is precision.
And that's when you strike. Clean, intentional, and professional.
Section 4. How do you form daily bias? Here's exactly how I build bias before I trade. My routine is simple but powerful. Step number 1, check the higher time frame trend. Higher highs equals bullish. Lower highs is bearish. Chop equals patience.
Step 2, you're going to spot liquidity. Who needs to get taken out before we move?
You can't long in the premium or short in the discount. If you do, the market will humble you.
That shit will humble you.
Step number 4, consider the session profile. Asia equals range. London is the manipulation. And New York will deliver. Step number 5, primary plus alternative bias. If you don't plan both, you're reacting instead of reading. Trading without an alternative bias is how you get blindsided. Section 5, how do you read context? When I read context, I'm asking, what part of my story are we in? Number 1, expansion, retracement, consolidation.
Number 2, imbalances.
Number 3, liquidity targets.
Number 4, we got session timing.
Number 5, displacement. If there's no displacement, there's no intention. No intention equals no trades.
And that's why you guys can't be chasing those little tiny candle moves.
Alright, let's walk through the full explanation day, how a precision trader reads it. Example, daily bullish, 1 hour into the discount, Asian tight range, liquidity sits below, London sweeps, displacement up, New York retraces into the fair value gap, and you're targeting the previous day high. Bias is long, context is perfect, and the entry is clean, one trade, one model, one direction.
And that's how you avoid overtrading. You just literally remove the junk setup.
Section 7 is common bias mistakes and how do we fix them. So guys, let's talk about the biggest mistake bias traders make. Because most people don't just have a bad strategy, they have a bad interpretation. Mistake number 1, forming the bias before the session even starts. If you wait until 9:45 to form your bias, you're done. You're reacting and you're not prepared.
And that's when people chase the first move, and that's always the liquidity grab.
Mistake number 2, changing their bias every 10 minutes. Your bias shouldn't flip unless the structure shifts, not because of a random candle scaring you. Mistake number 3, letting news override structure. News doesn't break structure, it delivers structure.
Exactly, even news follows liquidity.
Mistake number 4 is having bias but not respecting it. You can have the correct bias but still lose money. If you keep trading against the bias, it's your seatbelt, wear it. So this is going to be section 8. This is going to be the deeper context on how a precision trader thinks. So guys, now I'm going to walk you guys through exactly how my brain processes context in real time. So first, I'll be looking for where is the liquidity? Above highs, below lows, inside an imbalance? There's always a target. The market never moves randomly.
Number 2, what's the narrative of the day? Is today a continuation day, a retracement day, a reversal day, or a consolidation day?
You only need to identify the story, not force the story. Number 3 is going to be what session behavior are we in? Asia session traps, London springs the trap, New York crashes out.
And if you don't know what part you're watching, the market's gonna humble you.
Number 4, is the move getting supported by the displacement? If the candles look weak, if we push looks soft, if the volume is dead, it's not a real precision trade, only trust displacement. Section number 9, 3 real life market narratives. So narrative 1 is the classic trend day. Higher time frame uptrend, Asia builds the liquidity below, London takes it, New York retraces into a clean fair value gap and pushes it to the next logical high. That's a textbook long. You only need one of those per day. Narrative number 2, the trap reversal day. Daily is in the premium. We break structure with real displacement. Liquidity sits above yesterday's highs. That sweep is your reversal confirmation. Context shift. Your bias shifts. Now you have hunting shorts with intention. So narrative number 3, and that's going to be the last one, and that's the fake out consolidation day. Some days the market is literally untrappable intentionally. Tight ranges, no displacement, constant wicks, session overlap confusion. In this case, context tells you today is a no trade day.
And not taking a trade during the day is what's gonna save your guys' accounts long term.
For sure. So guys, look, bias keeps you directional and context keeps you selective. When you combine them, trading stops feeling like chaos and it starts feeling like intentional. You stop reacting and you start anticipating.
You guys stop chasing trades, you start waiting for them.
And that's what makes you a precision trader. If you're gaining value from this, keep locking in with us. We'll continue breaking you down piece by piece. You're going to see the market completely differently when this all clicks. Let's fucking go, boys. That's going to be it for episode number 2. Hope to see you guys soon.